Ladies and gentlemen of the crypto space, we're live on a Wednesday, February 28th at 10:45 a.m. Look at that imagery. It's a take on an old Rodney Dangerfield flick when he went back to school. As a tell me. The guy wants to know the answer. Everyone wants to know the answers, and the answers are going to be different depending on who you listen to. I like to listen to myself. I listen to other people, but I digest what they say, and I don't do what other people say. I do what I say based on my understanding of all the shit that I listen to, combined with my capacity to digest that information into something that makes sense. Now, everything that's going on in the market makes perfect sense, particularly considering stuff like this. National Financial Conditions Index at minus 0.52. Anything less than zero is a very loose condition and has been coming down steadily since March of 2023. Loosening. And this is literally some shit that the Chicago Fed puts out. And you could also get this perspective with regard to what China's doing. This is a broad inspection of China-influenced liquidity conditions. As this goes up, liquidity conditions are improving. So since Q3, heading into Q4 22, liquidity conditions have been improving. Take a look at the move indicator and see what that's doing today. It's steady. It's at the lower end of its range-bound situation. So this is what's most interesting. It's the relative loosening of conditions, which is coupled with a variety of trends, and that's what's causing the Bitcoin price action. But it hasn't started yet. The moves that matter, that are going to result from increase in currency supply globally, it hasn't even started yet. Move hasn't rolled over. It has to roll over at some point, and that's going to manifest from. There's a lot of things that need to play out. They need to print $13.9 trillion, give or take, at a treasury. They're going to have to figure out how much is going to be bought internationally. They're going to have to figure out if the Fed is going to do what it has to do in order to maintain the solvency or the functioning, smooth market function of the system. And once all of that plays out, then everything has a capacity to go multiples upon multiples. DXY rolls over, move rolls over, and then liquidity floods the system. We're not even in uh, the interest rate cycle. We're not even in the business cycle from a currency expansion perspective. Nothing has started yet. All of this Bitcoin move is a result of passive flows in the ETF from the ETFs, GameStop type mentality where there's a rotation of capital. The general public is rotating capital. 401ks are rotating capital. This is basically not a move thus far. This is a repricing considering the change in market structure. It's becoming a much more important systemic asset. I see no reason it stops. It would take the ETFs to reverse, and the ETFs are not something that people are selling. These are retirement accounts and these are passive flows. I mean, obviously, there's just brokerage accounts and people buying in that regard, but when Fidelity puts on their websites, 1 to 3% allocation in your retirement account, it's passive flows. Every week, people's income from their labor is just being funneled into this relatively limited supply asset. And the emissions, the proof of work emissions, do not account for the amount of inflow. So there's a supply and demand imbalance. And what's fascinating, and this is pre-halving, it's very different this time. And it's different not only because of the amount of upward pressure from a bid perspective, it's also different because of the potential systemic vulnerabilities that exist. We could have a fair amount of downward pressure. And that is the whole point of this stream that I've been talking about the last years. You want to structure the portfolio so that it doesn't matter. So if you're trying to buy low, sell high, it clearly matters. You're directionally dependent. You're dependent on the price action going up. So you could buy low, sell high. And well, you guys aren't shorting, so you could buy high, sell low. You guys aren't doing that shit. So that is why we've talked the way we've talked over the last 2 years. I wanted to engage with markets differently. I wanted to be calm, relaxed, when this period of time that you're starting to experience right now came about. We knew it was going to come about. We knew this was going to happen. And I told myself I was going to structure everything. So when it does, I'm like, oh, that's great. Maybe adjust a little bit here, maybe buy a little bit of this on a discount. If it's at a discount, can I acquire a particular position size that's reasonable? What am I going to do with my cash? All right. Put the cash into Bitcoin, Ethereum, and stablecoins. Doesn't really make much sense to put in the stablecoins right about now, but it also, on the other hand, makes sense to have stablecoins so you can, for what they do, for the purpose that they serve. But right now, the cash positions unto themselves are appreciating. And if you see investments that you want that are at a good price, at a discount, and you could get an appropriate position size, you have the cash savings. So it's imperative. You don't spend your entire savings. It's just me redefining what the cash account is, what the bank account is, what the deposits at the bank are. And I don't define them as deposits in a traditional bank account. I define them as Bitcoin, Ethereum, and stablecoins. And I guess that's a big topic folks have talked about over the years is what is an account and how do you treat what you do in the crypto space. And I define this really as a new bank account, and that's how I use it. And it's shown to be a sustainable model, a sustainable methodology. It is facilitating mental sanity for myself. I'm able to be consistent with my rules. I have reasonable, not overinflated expectations. And I expect my expectations to be grossly short. My expectations are pretty much the bottom. Like, because I want to buy things. So I'm going to buy things on the way up. I'm going to buy things on the way down. I'm going to buy things when there's a damn discount, which means my mindset isn't at the top. The top is a moving target. What I give a shit about is if the bottom is higher than where we are. And that's where we're going to be. We're going to find ourselves at a bottom that's higher than probably still where we are, and certainly from where we were. And to me, that's all that matters. Because I have things that I can't sell. I have things that aren't positions. I have things that I own. I have businesses. And as long as those businesses have a higher low, cyclically, that's all that matters to me. So we're going to see all this frenzy, and I've said it time and time again. We're going to see this frenzy, this insanity, this exuberance, all the crazy shit that you see on social media. I always think of this, some of the Safe Moon propaganda videos, and it's just general public gets in such a frenzy. And I'm going to sit here and be like, oh, that's cool. That's cool. We can keep doing this stream. We're going to keep it calm, cool, collected. And it's as simple as that. Raul's in the house. Hello. Howdy. Assoon. Good morning, everyone. Noah, could you please describe what you meant when you said it's going to get weird? It's going to get weird. It's already weird. Bitcoin just goes up because of the passive flows. The structure of the system is different. It's going to get weird because, and that's potentially scary, because if the stock market rolls over, but the general public has changed its mentality significantly and they see crypto going up, there's a great chance for the stock market to roll the fuck over and crypto just keeps going up. And that would be pretty weird because crypto is not a U.S. stock market. U.S. market. It's an international market. It's an international emerging market. It's an international emerging market of emerging markets. It has nothing to do with a particular nation. It's related to by knock-on effects and pressures about what the hell's going on. So there's a variety of weird things that can occur. And that would be weird, very, very weird. I mean, look at China. I mean, seriously, China is in a deflationary thrust, so to speak, and crypto's going up, up, and up. So, what do you think the people there are thinking? I mean, clearly their markets rebounded, and they literally just intervened all over the place, and they're at all-time highs in Japan, and but when you see that divergence, when you see that weirdness, and it's clearly occurring in many places around the world where Bitcoin has already breached all-time highs in the respective currency denomination, that's the weirdness. You just don't see it here. The US is a bit distinct in that regard with the way the markets function. And the biggest thing you could do is get your mind the hell out of the US. Stop thinking of things relative to the US as a big planet out there with 270 plus countries. You really need to broaden your perspective on the way you look at the world because the US is a relatively small population and certainly isn't representative of the average perspective or perception of what the hell's going on in these markets. We're a minority in the US. Keep that in mind. Athletic concept. Good morning, Noah. The rotate tour, 50% stables. Add the Phantom this week. Interesting. Let's take a look real quick for the fun of it. So this is volumes are interesting. I've been looking at that. Volumes are just up, 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 and away. So positive sub environment. That's a big deal from an all perspective. We haven't seen that in a long time. Ethereum, 2%. That is a big positive sum impulse. That's good to see. Arbitrum, 293. Solana, 246. I'll go down the list, but I don't, it's marginal to me what's going on Polygon, albeit Matic did break out, so that looks pretty interesting. Positive sum environment. Avalanche, positive sum environment. Holy shabash. Jeez, that's crazy. Wow. Okay, that's pretty interesting. Phantom did very well in 2020 and 21. It's all literally a positive sum environment across the board. Kava, you gonna load Kava? 0.16 marginal, but let's look at volumes for the fun of it. Ethereum is Uniswap and Curve, nicely in the lead. Nothing much interesting down here. Solidly gets a lot of efficiency, volume to TVL. That's a complicated story, not to digress, but it's still interesting because it is on the list. And I want to look at Arbitrum, and we'll take a look at Solana as well. But it's Arbitrum from an Ethereum perspective that interests me the most. I only have marginal exposure to the Solana ecosystem via Hero Network. But this is pretty cool. Recently acquired some Ramses Exchange exposure, the highest efficiency uh, from a volume perspective, 2.35. That's much higher than Uniswap. So that's pretty interesting. That's why there's so much fees and so much revenue going through that number 5 exchange. Camelot was up at the top. Uniswap flipped it. Very interesting to see. So it's good to keep an eye on this stuff. Is Solana on this list? Yeah. Let's take a look at Solana real quick. So it's quiet, but it's quiet from an already adjusted perspective. Growth of 1.89% on the weekly. That's a massive volume. Look at the volume. $1.13 billion a day. That's quite extraordinary. So my eyes on this on the market in the coming months is really Arbitrum and Solana. I mean, you're gonna find incredible things that outperform from a Phantom, a Matic, a Polygon, and an Avalanche perspective. Probably base as well. So the easiest thing to do is try and find things, or hopefully you already found them, because this is really not the time when discounts are available, that offer you exposure to cross-chain markets. That's why we own protocols, so you have alignment with all the networks that the protocols are deployed on. Um, it's one of the most important things we've tried to do over the years is to detach people's brain that they're investing in a particular network. You have no vested interest in Ethereum. I mean, clearly you can have your cash position denominated in it, but EVM isn't really coupled to Ethereum anymore. EVM is all over the place. EVM is all the way on Cosmos hubs. EVM is all the way on Polkadot parachains. EVM is on Neon, on Solana. EVM is everywhere. So it's ubiquitous in many regards. So it's not an Ethereum product per se anymore. Different story to consider. Good morning, Kat. Do you think on curve emissions as a protocol expense? Yes, I see it as deficit spending. Emissions minus revenue is negative P&L. Yeah, so the United States has a negative in a budget deficit, but it does pretty well. So I see it as a budget deficit, and I see the excess emissions. I see money in terms of bonds, so I see Curve as a bond from a nation state perspective. So it exports these bonds, it's the Curve emissions or the bond export, and I see the sterilization of that excess supply. It's like, look what Convex owns, look what protocol after protocol after protocol owns of the supply. And all that supply is sterilized because it's max locked. CVX CRV, max locked 4 years, never going to come out. It's just CVX CRV. It's non-redeemable. It has been sterilized. And and all these protocols that are sterilizing this excess supply are also reinvesting back into the Curve ecosystem because they have their own tokenomics on top, and that causes capital inflow. So it's a very similar causality arrangement that the United States achieved starting back in the 70s with the petrodollar system, which is the most fascinating thing I've observed over the last years, and I call it the Federation. Um, and there's really only one in the entire crypto space. That's the Curve Federation. Nothing else has emerged that's even remotely comparable to it. So that take emissions minus revenue is negative P&L isn't applicable. That's from a business perspective and a balance sheet perspective. What matters is the $130 million worth of cash flow that has come into the protocol and distributed to its owners. There's a constant B2B business from a Vode Rentals perspective to finance liquidity from the business perspective and to direct emissions, which is very much akin to maybe lobbying, like a decentralized lobbying structure. And all of this is novel in historical terms, from a financial perspective, from a nation state perspective. None of this has really been done before, and it's just tantalizing to think about where this is going to be in 4 to 8 years from now. Hope that helps. Also, are you familiar with MUX? Their VE MUX pays 120%. So that is very broad, and percentage points really mean little. What's pertinent is X, Y, and Z. How much does it cost? How much is it paying? And how likely is it to continue paying into the future? And if that 120 is going to come down to 80 to 70 to 60 to 50, there's plenty of things paying 50, 40, 30, 20%. What's the difference? And now you're coming into the type of conversation excess diversification. Are you concentrated enough? A portfolio that does best is effectively concentrated rather than excessively diversified. The common denominator is APR or ROI. And an ROI of 5 years is pretty interesting, and that's merely 20%. It kind of changes everything, and that brings up the entire conversation of how the structure of the system is changing. An ROI is a massive difference compared to the 2010s. And the 2010s, there was no such thing as an ROI. Maybe obviously the venture capitalists had their stuff, but from a yield and a standard traditional investment evaluation perspective, there was no yield. The Fed funds rate was basically zero, and the yield on equities was bullshit. So this is a different equation now. It's the return of the investment proposition where you could actually get a 5-year ROI, and 20% is a massive deal. And especially from a crypto market standpoint, where 20% is not necessarily inversely proportional to the price point of the underlying asset. Uh, you could have it's decoupled, so you can have a 10x in your total value of your ownership, and not a position. Note how I distinguished, and you can still retain that 20%, and that's a fascinating phenomena that has been shown to occur with the way these protocols operate, with the way the price action goes. It's just a property of these types of assets. And that's quite remarkable. Think about from the next bottom perspective, where the market next bottoms. If the market next bottoms 10x from here, that's crazy. If that kind of cash flow remains consistent, 20%, but the portfolio goes 10x on the money. What the heck is going on? So it's going to get weird. That would be weird. That would be very, very weird. $61,315. When 12K? When's the market going to roll over? You need to think about the markets different. Everyone has buy low, sell high, and that's no sustainable way to engage in markets. But it's not for me in this one stream today on a Wednesday to try and cram down everyone's throat how to think about markets differently. We've been literally doing this shit for 2+ years, more, 3 years, because we were talking about during the last cycle. But really, during the last 2 years was a bear frickin' market, and I've been trying to hammer home when the market starts to be in a frenzy, you want to be cool, calm, and collected with a very sustainable methodology, a repeatable practice of how to engage with these markets. So, you know, at least one other person, because I've been doing this stream, is prepared and calm and seeing 61,000 like cool. It's nice to see. It's comforting. It's a confirmation that what we were thinking is the case. And it goes up, it goes down, it goes left, and it goes right. And all that matters is the businesses just keep producing cash flow. And they will. With this type of price activity, this type of frenzy and excitement and emotion and opportunity, there's going to be credit all over the place. And there's going to be trading from a Forex perspective. So we're going to get cash flow from Forex. We're going to get cash flow from credit as the endogenous currency supply in these markets expands and the exogenous flows keep flowing in. I mean, looking at single digit percent across the board and double digit percent gains in liquidity on Phantom is pretty interesting. We have exposure to Phantom. Curve Federation is exposed to Phantom. And we'll see what happens with Solidly, and whether that starts paying or not. It's another story. But that's the deal. Hope that helps. Sir Joe, present and accounted for. Throw some comments up. If you guys have any questions, I'm happy to answer everything that's on your minds. I have a hard stop at 11:25, give or take, which is about another 10-15 minutes. I go flip through some charts in the meantime while you get your questions. Ethereum is lagging. Bitcoin 3.3%. You can see that best from an Ethereum BTC perspective. Still on trend. What you want to see is it obviously close above the 50 SMA on the monthly, which is still right around this trend line. Trend lines are very broad, and we have big wicks below. But this is still a comforting pattern. And in the end, it's just a cash position. If you measure your portfolio of assets of altcoins, Ethereum and Bitcoin denominated, you can see that you're deep in the red. You're down. But that is not to be interpreted necessarily as a negative. I've strongly encouraged over the last years to not think in terms of how much Bitcoin you have or how much Ethereum you have. You're going to drive yourself nuts. The appropriate denomination isn't even necessarily dollar denominated or fiat denominated. The appropriate denomination is your capacity to finance your life expenses and buy time. That's the most important thing. The game we're playing isn't about having the most money possible. That's the biggest contrarian thing I've ever expressed to you guys. I don't want to make as much money as possible. I want to cover my wake up money, be able to wake up in the morning and know that I'm covered. I can take care of my family. I want to be able to take care of my home. I want to be off grid. I want to have little to no energy expenditures. I want to do those types of things. And that's the most important goal to focus on is can you do those things? It's not about making as much money as possible. You got to get your life expenses in order, and that's how you measure success. And that'll get your head out of the exuberance of I'm going to be super rich. To do what? You need to have goals. You need to have ends and stuff like that. Anyway, Dan, what do you think is a good percent allocation between cash position and productive assets? See, here's the thing. In this type of market, you don't need much cash because we're going to be making cash. It's going to be coming in. Um, but on the other hand, what are you going to invest in? Uh, are you going to get a discount? So obviously, you're accumulating cash and saving. And just like you historically did, and we've done that in our years past in our lives before crypto, you never spent all your money in your savings account. So it's the same thing. And in this instance, we have ideas and wants of what to invest in, but you can't invest if it's not at a good price, because we still have to adhere to those rules we've established over the years. You buy quality businesses at a discount. If you can't get a discount, you don't buy it. Uh, Now you could adjust from your cash position, and you could choose different gas tokens and to to catch a ride on a frenzy, and that has implications. The biggest implication is reporting requirements. That's active income relative to passive income. That's capital gains, and that is something I strongly try and avoid. And in fact, I completely do not have any capital gains, and that's an important thing from a reporting standpoint. Passive income is very different. But that is something that you can engage in. Everyone wants to probably engage in that, and I strongly fight the urge to do that. So in that regard, Bitcoin, Ethereum, call it a day. Um, Solana is probably going to outperform Ethereum. Surely is today, 6% compared to Ethereum's 3%. It's trailing Bitcoin only by a fraction of a percent at this point. Then again, look at Syscoin. Syscoin's up 20% of the day, which is nice to see, but that's not something that's off the radar of so many folks. But 20% is nice to see repricing. This thing was a fraction of a penny in 2017. And I've had this thing for like since 2017. So this was a 20x on the money. I mean, I think I only bought like $1,000 back then, but so this thing's going to reprice very nicely as a Bitcoin L2. And the best part is it's a masternode, so it produces income. So there's always passive income to be had from here, and the passive income is a percent, and that percent is relative to its price point because the income is denominated in the asset itself as it appreciates. So that's cool. Phantom at 10% today, so Phantom is actually outperforming Bitcoin. I think it's probably trailing on uh, uh, the stablecoin increase on the network, 50%. So there's some interesting stuff going on there. If someone has the interest, they could dig in, but whatever is going on is certainly interesting. Um, Stacks is still pretty hot, 5%. Alex has 6%, but that's already repriced. It could reprice more, but whatever. I'm not interested in that ecosystem very much. Dimension keeps getting hammered at $7. Must be a bunch of seed round investors getting out at 7. Tia stalled also at 17, well, 20, and has been beaten down to 17. Dimension stalled at 7, 8, and has been beaten down to 6. But it's a nice constant bid upward and of interesting. Nothing has changed with regard to them being interesting. Data availability And roll-ups are very interesting, but I think when Fractal comes online, that's going to surely catch the buzz, and it's going to be very interesting, and is already something we have exposure to. Whereas Adam? Adam broke 11, finally stuck at the $10 range for so long, but it still has to get above 13 for to start looking structurally bullish from a high time frame and HDF perspective on the monthly. Osmo just got repriced all the way back up um, with the dominant liquidity of the Cosmos hubs. It's still meaningful, and the yield has come down. The interest rates have been repriced. The inflation rate from an Atom and an Osmo perspective. So these are interesting, and this is stuff to just let sit, and it just produces cash flow. Nothing to complain about. Have you looked into Napier? Yeah, it's gonna be a big deal, I think. Um, would have been interesting to try and get a seed round if they even offered it. But look, what have we been talking about all these years? The biggest thing that's occurred, I mean, the biggest thing in crypto stablecoins, we've identified foreign exchange, we've identified credit as the biggest business, not only in the planet, but clearly in the crypto markets. And we've talked about the Federation, which is this rare organic manifestation that occurs between nation states and has occurred in these crypto markets. So yet again, another participant in the Federation. Simple as that. So that's cool. Look forward to seeing what the effects they have and what they do. And if there's an opportunity from a business ownership perspective, great. But we have to see price points, so on and so forth. So I'm sure we'll be talking about that on Discord, and we'll keep our eyes on it. To right, we're calm and prepared. Yeah, I ain't going into crazy mode. Look at this. Beautiful, beautiful. I love sitting back and doing this. I go to work and I'm watching this and I'm just content that we were right. It's not even about number go up. We were right. That means all the difference. Our stories were right. And when we get to tell our friends and our family, when they ask, you don't really want to bring it up. But we were right. That means everything to someone, especially me. We were right. Can you comment on passive income being a higher rate than capital gains tax? Yeah, sure. Isn't passive considered ordinary income? Yeah, passive income, ordinary income. But from a business perspective, when you structure your asset ownership, not from a personal level, I mean, depending on what your personal expenses are, because clearly the standard deduction is relatively high, especially for a family. So unless your expenses on deductible items that qualify as deductible are above the standard deduction, you're not going to really benefit. But from a business perspective, uh, there's a lot of deductions against passive income that are suitable from a business perspective. So that, yeah, the tax rate is higher, but also much more could potentially be deductible if you have those kinds of expenses that are consistent with things that are deductible. In real estate, we try and push income to cap gains versus ordinary income. Yeah, and this is a very important type of exercise, and it's going to be different for everyone's portfolio depending on how you've structured it. It's going to be very, very different depending on who owns your portfolio. If it's encapsulated in a business type of structure, a trust type of structure, or if it's literally personal. The worst tax situation imaginable is personal taxes. That is literally the entire point of the government, is to constrain personal income, because that's where most expenses that affect uh, um, consumer prices are. It's discretionary spending, it's consumables, consumer staples, or entertainment, and those are mostly personal expenses. Food, fun, and fashion is a very broad category that's very personal. So be very cognizant, everyone, how you structure what you own, and the own nothing, control everything. Who said that? Rockefeller. And you really shouldn't own many things, but you should own things that own things. So you could uh, you know benefit from a capacity to structure an organization. Just broaden your perspective on the way things can be managed. Hope that helps. Good morning, Noah Larson in the house. Much a pleasure. John, what's your opinion on taking profits into precious metals? Precious metals are basically an infinite market at this point with the paper markets the way they are. Uh, Precious metals are really doomsday prepping. I would lump them in with meals ready to eat and like canned foods and stuff. Like that's like money that it has it's a money that is useful in case of a post-apocalyptic scenario. So that's doomsday prepping, and that's okay. We should all be a little bit of a doomsday prepper, in my opinion. Critical mass, my man. Larson, how big of a role do you think the Aladdin Dow boys will play in the future, specifically CTR? Well, CTR is a beta play on FXN, um, and that's cool. It's speculative, so that's a relatively small position size, considering we don't know where things are going to head. It's a micro cap. You got to understand these assets don't even register on the scale of equities as micro caps. These are like sub pink sheets. Talking about stuff that's $1 million market cap, it doesn't even register. Food for thought on where things are and where things need to head for them to become significant. A small cap is $1 billion, or something like that. I don't even think a mid cap is $1 billion. I think that's bigger. And the big caps are multiples of billions of dollars. We were talking on Discord about timing of things. Do you think this still runs into 2025 given the speed of things? The momentum can get interrupted, but right now the momentum will continue unless there's a systemic event, a credit event, or some sort of disruption in the liquidity composition of the world. It will keep going. Things keep going until there's a disruption. There's plenty of reasons for things to just keep going. And there's a lot of risks for things to get disrupted. This is all real. So my expectation is it keeps going, and I will not be surprised at all if things get disrupted. But this isn't the market that I'm interested in right now. If it keeps going, great. I'm interested in the fact that they have to print $13.9 trillion in 2024. But that's $13.9 trillion of money, of bonds, and then that gets levered 10, 50x or whatever in the Eurodollar markets to 139 to a half a quadrillion dollars that's going to flood the financial system when the conditions are right, which is probably interest rate cuts as a leading indicator about a quarter or two for that money to be turned into currency. Big difference between money and currency. I define bonds as money and dollars as a currency. Money makes currency as I define it. Hope that helps. I got to wrap it up in 2 minutes. I'm going to try and get to everyone. On a long enough time horizon, aren't most quality assets at a discount at these prices? Yeah, but it's going to be pretty uncomfortable if the next low is lower than current prices. So then it's not a discount. So, you know, you're right, but you might have to wait 4 years or 8 years. And in equities land, you've had to wait 13 years or 20 years. So that's not something that is necessarily reasonable. Guns and butter are greater than precious metals. Very well said, Davey. Good stuff on that. For friends becoming interested but not wanting to dive as deep as us, do you think DCAing BTC? Yes, DCAing is fine because it's all small money. If DCAing 10, 20, 30, 40, 50 bucks, that's a fraction of your weekly income, that's always fine. Dollar cost average. It doesn't hurt anyone to dollar cost average. Um, and then not when it's frothy, you sell when the liquidity indicators roll over. Move hasn't even rolled over yet. Uh, I'm running out of time, but Move hasn't even rolled over yet. It's at 110. This thing needs to roll over at some point. Combine this rolling over with the dollar rolling over with the interest rate cuts, and there's your market. Then that's the frenzy is down here, but then you have your spike. You have your spike, your move spike, your volatility spike, where shit's starting to hit the fan, and that's your top. You can literally see the top at the end of 2021, no, late November, December 2021 in the move indicator as well as the Fed liquidity or the Fed balance sheet mostly. It's just clear as day. It's November of 2021, and you see it in the dollar as well. So we'll have a great sense of hopefully about a quarter, about 3 months lead on where the top is based on the way we understand the charts nowadays. I've been here since May 21, and you've massively helped me get comfortable with these markets, and now I do very little. You're very welcome, and we can do better. Sarko, good stuff. It's been an interesting ride. The bad guy, hey Cap, what do you think about the relationship between performance of BTC and S&P 500? Not correlated whatsoever, other than by sentiment knock-on effects. They never were correlated. It was always liquidity. Any concerns with AI disrupting software development income? Very much, but not right now. Say about 5 to 10 years. And my profession being a software engineer, I'm clearly interested in this very topic. I expect my job to be disrupted in about 5 to 10 years, so it's not the longest time runway, so to speak. You got time. You could transition, but you got time. Afternoon, people. Much a pleasure. Have you seen JLP liquidity pools? Yeah, I don't do much liquidity providing at all. At all. If you have a lot of money, like a mil, 2, 3, 4, 5 mil, liquidity providing is interesting. I can't, I don't know who provides liquidity to volatile assets, but 3, 4, 5, 6% on stable coins, it's nice liquidity. When you got 5 mil, 300 grand, 6%, that's cool. Seems a nice play to store away some stables, yeah, but not right now. Not the way the market is. This is exciting right about now, and I'm not. I'm skewed in the cash position away from stables into more so Ethereum and Bitcoin. There'll be a time for that rotation to go back to stables, but holy crap, 61.5 on Bitcoin. What do you think about digital nomading? Which countries would you visit and why? Yeah, Argentina, El Salvador, uh, Southeast Asia, Japan. Love Japan. Maybe some of the islands, Caymans. One day. Not right now. I got things to do at home. But it's a good thought. Nice thought you have there. What do you do after you've accumulated enough money and don't need to work anymore? I would do this stream, and I would teach everyone how to understand markets differently, how to be different, how to be more healthy mentally, engaging with markets, not be in a frenzy, be more comfortable, how to understand these markets. I like teaching. I would be a teacher. Thoughts on FXN? I'm more interested in the beta. So Cleve, CTR, FXN is going to go wild with the stablecoin. Stablecoins are going to frenzy. It's just the way it is. And I look forward to that endogenous capital creation process. I expect to see a very large number in stablecoins from exogenous flows to endogenous creation processes, the CDPs. That's going to be a very interesting market cycle in that regard because this is an emerging market, and emerging markets print their own currency using collateral, using money. Money prints currency. JLP is 100% plus. It's a big deal. Bear in mind, look what I did with Prisma. I got out at about 100%. I wasn't complaining at 1800%. And then it dwindled down to like 100%, and I got out. And I'm okay with that. Prisma's, it was a nice free position. There was no real capital loss, and now it prints 20, 30%, give or take. I'm not going to complain. It adds up if it ever loads. Yeah, I got $1,000 stashed up. 28%, that's pretty nice. Nothing to complain about. Yeah, great Prisma play. Wish I took advantage of that LP. Didn't want to risk missing upside on Ethereum. Well, we find ourselves where we are. I got to jump. I got a meeting. Appreciate all of you. Thank you for joining. Wednesday, February 28th at 11:30 a.m. Tell everyone to subscribe. This is going to be a crazy market, and you need to think about it a little differently. I'll be around later this week. It's Wednesday. We got a stream on Friday. Link in the description to Discord, the most rational community in the entire crypto space. I appreciate all of you. See you next time. Peace.